All right, everybody. So a couple of points to update you on as at or very close to the close on Tuesday. First of all, this is the chart of the Dow Jones Transportational Average. This is the daily time frame, but really the best way for me to really surmise this and to show you just what is going on is if I zoom on out into the weekly chart. And as you can see on my screen, what I want you to pay attention to is where we see price action begin to push away from and accelerate away from this primary bullish trend line, which you can see the extension moving off into the right-hand corner of my screen. So essentially what we have been in really since the very early period of 2016 has been a very much so strengthening of the transportational average. And essentially what has happened over the past 1.5 weeks is that the transportational average, it has largely led, of course, the industrial average, the S&P 500, and the NASDAQ lower. This was really following that of the breakdown in the Russell 2000. But what we are essentially doing right now is just retesting this accelerating fan line. And as you can see, if I go back into the sort of the molecular level anyway, you can see that we overshot this more or less into the early period or the late stage of last week, Thursday, Friday. And now we're starting to see a little bit of a turnaround here, which is taking us through to the close on Tuesday. So it looks as though at the moment we are respecting this intermediate trend line or this accelerating fan line. We spoke about this over the weekend, and as such, it's flowing back into some of these other more closely followed markets that we pay attention to. If I bring up the industrial average, we spoke about this over the weekend. Again, we've had this very strong waterfall sell-off back down into, if I can bring up the weekly chart, to a lesser extent that of an accelerating fan line, and we're still holding it. You can see that we tagged a confluence area of support as at an intra-session push last week. And it doesn't come as a surprise that the markets are once again trying to push off from a lot of these support areas. Now, what I can say is that speaking through this and really presenting this to people over the weekend, one, we came to the conclusion that we were very close to technical support, more so intermediate support for the majority of these individual charts, but there was still a possibility that we could see a secondary push to the downside. That is still entirely possible. And when we thought about it, although we were net short in a bunch of profitable positions last week, even some of those positions are still open into the beginning of this week, it really is the time to begin at least adjusting your stops that we spoke about over the weekend, but also more so sitting on the sidelines and allowing the volatility of these markets to shake out. What we more or less said was that given, of course, the elevated volatility across or really collectively in the US and also global markets, we expect the markets themselves to more or less close unchanged come Friday later this week. So although we have seen a pretty decent pop to the upside, again, the Dow Jones on a weekly chart at the moment is up very close to, once we factor in, of course, the last 20 minutes of the session, very close to 500 points on the weekly advance at the moment, as at the close on Tuesday, considering, of course, Monday's little pullback. What we should see towards the back end of the week, unfortunately, is selling to take place once again to more or less drive us back down to where we closed on Friday. All right, so it is, in my opinion, relatively intelligent to not really be doing a whole lot in the markets. Yes, we are technically coming back down to support, but generally after we see these types of waterfall sell-offs, there is volatility that persists, and generally what happens is we get multiple tags of a resistance area that generally forms up in sort of reversal patterns such as a double bottom, for instance, or even short-term divergence to really hammer out a critical support area prior to us placing, of course, bullish trades once we see the support, all right, which will then ultimately be broken to take prices higher. If you find yourself wanting to buy the market on this sort of knee-jerk reaction, I would strongly encourage you not to do so because, again, the odds are that we are going to see, unfortunately, a little bit of lingering when it comes to the selling formation of these markets. Again, this is the S&P 500. Chances are that we are going to come all the way back down to 675. But again, generally what happens is you go through the volatility of a waterfall sell-off. Have we made the bottom yet? Not sure, not entirely sure. There's a good chance that we have, as per the transportational average, also the industrial average, as you can see in my chart right now, and also to a lesser extent, the NASDAQ. You can see that X marks the spot, or at least the confluence on my chart, if I can bring this into perspective for you. Just as you see this rising horizontal trend line along with this horizontal support, or what I should say is bullish trend line with this horizontal support just here. So you can see where all the support is on the NASDAQ as well. All right, now obviously that's going to flow into the individual trades, but again, this week is most likely going to be a little bit quiet, or at least if you're looking at this from a disciplined, diligent approach, it should be a relatively quiet week for you. as the dust settles. And then, of course, we can begin setting up bracket trades potentially towards the back end of this week, if not moving into next week as well. All right, so that's going to do us as at Tuesday. Enjoy your Tuesday evening. If you have any questions whatsoever, email me success@pivotpoint-trading.com. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.